Welcome to a new presentation where I will be talking about accounting for sales and purchasing. In this topic, we will cover some general accounting conventions and automatic journal entries that are created during the sales, purchasing, and inventory processes. We will also talk about some financial settings that affect these automatic journal entries. The platform not only delivers all the necessary instruments, but also provides you with detailed analytics of the financial health of your enterprise. Another essential benefit of the SAP Business One financial accounting is automation. The system is built on top of the following pillars: real-time response and updates. SAP Business One updates your general ledger in real time. This happens every time you add a transaction. This automation lets you save lots of time since the need to batch your journal entries for later posting is eliminated. However, you still have this opportunity if your business model requires it. Automation. The ability to create journal entries automatically is the major productivity booster of SAP Business One. This automation not only saves the time necessary for the manual creation, but it also lets you avoid mistakes associated with manual data entry. Drill down functionality. The system lets you extend information available on a particular screen with the orange arrows. This navigation element is available all across the system, from the general ledger to transaction source documents. Templates. SAP Business One financial accounting tools lets you automate redundant tasks by recurring postings based on templates. As a result, you not only save tons of time but also avoid posting mistakes. Data integrity. As we just mentioned, SAP Business One does everything to prevent users from posting manually journal entries. Most routine processes become automated and follow predefined templates and algorithms. As a result, you can set up confidential accounts and maintain data integrity. Advanced expense management. The system of alerts lets you control and manage expenses more efficiently. Therefore, you always keep your finger on the pulse of your enterprise. Flexible reconciliation. Although SAP Business One financial mechanism lets you reconcile transactions automatically, you can still implement the manual system of controls. It's up to you to decide whether to save time and get accurate reporting or be involved in financial management for 100%. Audit Trail. They enable you to track changes to all data and documents. You get the information on time they were applied. At the same time, the system shows who edited the information. While most companies come to SAP Business One well prepared, they have a well-established chart of accounts, customer databases, existing vendors, and recorded transactions. The ERP system offers enough tools to cope with even the most demanding financial situations. There are numerous solutions that let you migrate your business data into SAP Business One to get the most out of the platform and keep your business operating in full swing. You can see the 5-step process of setting up financial accounting in SAP Business One. Posting periods. Usually you start setting up your SAP Business One financial accounting by creating posting periods. Inform the system regarding how often it needs to report on accounting duties and financial results. Account segments. Next, it is necessary to specify your account segments, specific business units or activities you are going to track. Chart of accounts. At this stage, you assign an account code to each account. Consider it a combination of your defined account segments. Your chart of accounts organizes these smaller units into higher level categories. GL account determination. Finally, you can provide SAP Business One with information on which accounts to use for journal entries created automatically. You optimize the process with following purchasing, sales, and inventory documents posting. Data migration. Last but not least, you need to transfer the existing financial data into SAP Business One. Before going any further, we need to clear the terminology associated with SAP Business One financial accounting. An account is a formal record of a certain type, including asset, liability, equity, revenue, or expense. It shows its beginning balance, transactions, and resulting ending balance. A control account is a record linked to a business partner. Every time you post a document to the business partner, the corresponding journal entry also covers the associated control account. SAP Business One uses one default AR control account per customer and one default AP control account per vendor. As an administrator, you can replace the control account in any document. Note that a control account contains the total AR or AP balance for all linked business partners. Since SAP Business One includes control accounts in the balance sheet report, their balance reflects the total balance for customer and vendors. Also note that this part of the system is totally automated. You cannot post journal entries to a control account manually. A clearing account is an account used to record posting temporarily. It helps to address issues associated with the time gap that occurs between accounting transactions and an organizational task distribution. An active account is a record in the chart of accounts to which SAP Business One posts journal entries. Under account segmentation, we assume a bookkeeping method used to create account codes following the hierarchical business structure. SAP Business One financial accounting tools use the individual segments to correspond to the different business units, including company, region, division, department, etc. Besides, the system incorporates different categories, including travel expenses, product line, box office revenue, and others. A natural account segment is the beginning segment of an account code used to identify the account type. It can be a fixed asset, revenue, liability, expense, and others. SAP Business One uses numeric values for account codes only when using account segmentation. At the same time, account codes can be alphanumeric if account segmentation is not used. The chart of accounts is an index of the accounts in your general ledger. A general ledger GL is the main accounting record of your business that incorporates double entry bookkeeping. It means that your GL contains the accounts for assets, liabilities, profits, losses, income, expenditure, items, funds, reserves, and others. A journal entry is a record of a transaction that consists of such information as the transaction date, affected accounts, debit and credit, and description. Posting is a process when you record journal entries, both credits and debits, in your GL transaction in SAP Business One. Consider it a business activity that debits one GL account while credits another. Let us discuss some financial basics. Every business transaction is recorded in the company's book. This allows you to manage your company effectively with the option of producing financial reports to report the business transaction to the authorities. Every business transaction results in a value exchange. A certain account increases value and another decreases value, resulting in the recording of balancing debit side and credit side postings. This is the basic system configuration where you have master data, purchasing, inbound logistics, warehouse management, and outbound logistics. And all these things are basics of finance. Let us understand how automatic journal entry functions. These are the documents in the sales process that create automatic journal entries and therefore affect the accounting system: delivery, AR invoice, incoming payment, and deposit. Note that delivery only creates an accounting posting if you're using perpetual inventory. So starting with the sales quotation, it is converted to sales order, then delivery, then to AR invoice, then to incoming payment by payment means and deposits. So these are the documents that are In SAP Business One, a journal entry is automatically posted for many documents during the sales, purchasing, and inventory processes. Now let us assume for a moment that we are in a non-perpetual inventory system. In that case, in our sales process example, the AR invoice automatically creates the following journal entry. There is a debit to the customer account for the total price of the sale. There is a credit to the tax account for sales tax and credit to the revenue account for the sales price. Let us focus on the debit side. Each transaction registered for the customer affects the customer account balance. The journal entry window on this slide lets you create journal entries manually. Its purpose is to help you record transactions that SAP Business One cannot initiate automatically. For instance, it can be a record of finance charge to a customer account. Also, a service fee to a bank account is a frequent cause of a manual journal entry in SAP Business One. You can create a manual journal entry in SAP Business One as follows. Go to main menu of your SAP Business One, open its financial section, proceed to journal entry, the form from the image on the slide displays. Now let us look at the customer account in more detail. This is an example of customer account. The account balance represents the difference between the total debit transactions and the total credit transactions recorded for that account. The transaction summary or the balance of a certain GL account or business partner is the initial information the accounting system can provide about the business. In the graphic, we see that the total debits are greater than the total credits, so the account has a debit balance. Previously, we mentioned that in each journal entry, a certain account increases value and another decreases value, resulting in the recording of balancing debit side and credit side postings. The effect on the account balance would be assets, expenses, and drawings accounts are generally in debit. Liability, revenue, and capital or equity accounts are generally in credit. Let us continue with account types here. Here we see the typical account balance of the different account types. For example, let us look at the value exchange for assets and liabilities. For assets, debit transactions always increase the asset value, credit transactions always decrease the asset value. For liabilities, credit transactions always increase the liability, debit transactions always decrease the liability. In a typical AR invoice, what is the effect of the debit and credit amounts on the involved account balances? This is an important question that we can ask ourselves. Once again, if we make some assumptions to keep the example simple, let us assume that the customer is tax exempt and that this is a non-perpetual inventory system. The answer is that the two accounts increase their values. The customer account is considered an asset, so any debit to this account increases the account's value. A credit to the revenue account, as we saw on the previous slide, increases the account's value. Remember that you can preview the corresponding journal entry posting and the involved accounts before you add a document that generates journal entry. You can do so by choosing the journal entry preview icon from the toolbar or by right-clicking the document and choosing the journal entry preview option. In the journal entries that are automatically posted by documents in SAP Business One, how does the system know which account to use? The system knows which accounts to use because when you initialize SAP Business One, you define default GL accounts related to a specific business processes in the GL account determination window. In this window, you also define control accounts that link the business partner subledger accounts to the general ledger. First, let us review how accounts are determined for items used in a business processes. As we mentioned, when you first implement SAP Business One, you define default GL accounts to be used when transactions are created during the different business processes such as sales, purchasing, and inventory. These default accounts are defined in the Setup menu under the Administration module. Under Setup, you will find the section for Financials, which includes the transaction for GL account determination. When items are used in the transactions, there are two options for account determination. In the traditional solution, the system looks for the default accounts based on the account determination set in the item master data. Starting at version 9.0, you can work with the advanced solution for account determination. The advanced solution provides a centralized matrix to determine rules for assigning GL accounts in journal entries according to a predefined or closed list of criteria. Both options are based on the GL account determination window. In the GL account determination window, you also define the control accounts. Accounts receivable for the sales process and accounts payable for the purchasing process. A control account links the business partner subledger accounts to the general ledger. You need to define a GL account as a control account in the chart of accounts. Whenever you post a document to a business partner, the system automatically registers the journal entry to business partner master data, account balance, and the control account balance. You cannot post journal entries directly to a control account. In AR invoice, for example, when the customer is debited to accounts receivable, account is also debited. The journal entry appears now in both account balances, the customer and the control account. Note that the business partner master data balances do not appear in the chart of accounts. Only the receivable and payable control accounts appear. The receivable and payable control accounts accumulate the customers' and vendors' transactions in their balances. Therefore, the chart of accounts presents the complete financial status of the company. The financial reports also show the full picture. For example, the balance sheet contains the accounts receivable and accounts payable. We have learned how the system knows which accounts to use in automatic journal entries. This is done using the value defined in the GL account determination window. But how does the system